Concerns dialed down yesterday afternoon.
Indeed. As we reported, Larry Kudlow spent some time yesterday trying to calm things down. And again, making the point that we're at least 2 months away from any tariffs being slapped onto anything. So there's plenty of time to talk and plenty of time. We've seen this before where the president gets to indulge his frustrations and indulge his aggressiveness, and then over time things get dialed back. We just saw it in the U.S. with sending the military to the border, and it just turns out it's the National Guard. So we'll see. There's plenty of rope to reel back in.
Yeah. Jeremy, I mean, within the asset space, it's been equities, which has been the lightning rod of concern when it comes to trade. Do we see a spillover to the FX space? Is that coming? Where's it most evident?
Well, you're absolutely right that equities have obviously been the lightning rod, as you say, for the for the uncertainties. I think, in a sense, I think we're moving away from the sort of the war analogy, and we're going back to a little bit more of jaw in terms of negotiations. I'd agree entirely with what's been said. I think in the context of the equity space, well, clearly, when we do see episodes of risk-off or equity selling, then we are seeing the US dollar under a little bit of pressure. We see the yen being a traditional beneficiary, which, of course, is bad news for the Bank of Japan in terms of their inflation target. But nevertheless, that's where we see one influence. And also, we tend to see the euro performing a little bit better as well, because, of course, if you're talking about trade tensions between the US and China, then, of course, there are potential beneficiaries in terms of any eventual trade war. And, of course, that could be at the benefit of Europe.
And besides Europe, who else benefits?
Well, of course, we're in a scenario where if you think about the trade war dynamics, then, of course, you start to think about those economies which are open and very much orientated to trade being the net losers, and those which are, the ones with the current account surpluses are the ones potentially where there are greater degrees of insulation. So, obviously, the yen being an obvious counterpoint in that context, the Swiss franc, and also somewhere like Norway, for example.